Now, Britain says that it has developed a plan to deal with Brexit. How much of this plan do we know? And is it of any consequence in terms of how investors are positioning for post-Brexit?
Yeah, the United Kingdom and their Brexit plans, always one of my favorite topics here, because just like many traders also have, there are still so many question marks what this Brexit now at the end is really going to mean to do business with the United Kingdom. Well, Theresa May, the Prime Minister of the UK, she is meeting today with German Chancellor Angela Merkel. She is in Berlin, and most of their topics will be mostly about Brexit. After this meeting, May will be heading to Munich, where a big security conference, also with lots of international politicians. Also, for example, the US foreign minister is going to be there as well. German officials, they are still frustrated with Britain's lack of clarity, what this split up is really going to mean, how trade is going to be done in the future. We are hearing from the Britain side that the Brits still, what they always call, want more flexibility when it comes to the Brexit, the future of the Eurozone, and also the governance reforms proposed by French President Emmanuel Macron are seen also as more pressing items for Germany right now than Brexit, because many, that's also what investors are telling me, the results, that the immediate results with Brexit most likely are going to hit the UK much harder than the rest from the bloc. So yeah, lots of questions, lots of question marks. It will be very interesting to see what May will be talking with Chancellor Angela Merkel later today during the day.
All right, thank you very much, Daniel. Well, it's been a wonderful week with all of you guys there in Frankfurt, with Orange in particular, and of course you today. So we hope to see Conrad next week. Enjoy the rest of the weekend. Moving on now to the U.S., where stock index futures posted solid gains ahead of Friday's open, lifted by positive sentiment in domestic and international markets. Around 5:10 a.m. Eastern Time, Dow futures were up 92 points, indicating a rise of 140.63 points at the open. The Nasdaq and S&P 500 futures also pointed to a higher open for their respective markets. The positive uptick in U.S. futures comes after Wall Street posted solid gains on Thursday, with the Dow Jones Industrial Average closing up more than 300 points, securing a 5-day winning streak. Despite the market recovery, investors remain on edge as the prospect of higher interest rates continues to rattle sentiment across the globe. A slew of economic data and earnings are due to be released at 8:30 a.m. Eastern Time. Housing starts and building permits, import prices, and the Business Leaders Survey are all scheduled to be published. Consumer sentiment and the Quarterly Services Survey are set to come out at 10 a.m. Eastern Time. In Asia, equities ended mixed on the last day of the week, but trading in the region was subdued, with many markets shut for the Lunar New Year holiday. Activity was lower than normal, with markets in China, Hong Kong, Taiwan, South Korea, Malaysia, and Vietnam closed. Japan's benchmark Nikkei rallied 1.19%, notching a weekly gain of 1.58%. Utilities were among the biggest gainers, with Kansai Electric Power ending 5.89% higher, and Chubu Electric Power rising 6.52%. In wobbly trade, the yen hit a new 15-month high at 105.54 per dollar, extending gains for a second straight day. Japanese Prime Minister Shinzo Abe's administration reappointed Bank of Japan governor for another 5-year term, in an indication that the country's stimulus policy will stay the course. Australia's benchmark ASX 200 reversed earlier gains to close slightly lower, weighed down by manganese miner South 33. And back here in Africa, Côte d'Ivoire is considering 5 banks, including JP Morgan Chase & Co. and Deutsche Bank AG, for an upcoming sale of Eurobonds. The West African nation also wants BNP Paribas SA, Natixis SA, and Société Générale SA to market the debt. Côte d'Ivoire wants to hold a roadshow for the sale of 850 million euros, or about $1.1 billion, to 1 billion euros of debt before the end of March. Joining other other sub-Saharan African issuers, including Kenya and Ghana, that are rushing to sell debt at a time when the U.S. Federal Reserve remains on its policy tightening path, pushing yields higher. The country issued $1.25 billion of bonds in June 2033 with 6.25% rate and 625 million euros of 8-year notes yielding 5.125% in an auction that attracted almost $10 billion in bids in June. And here in Nigeria, the Debt Management Office has announced the pricing of its offering of $2.5 billion Eurobonds under its Global Medium-Term Note Program. The country's fifth Eurobond issuance is made up of a $1.25 billion 12-year series with an interest rate of 7.14% and a $1.25 billion 20-year series with an interest rate of 7.69%. When issued, the note will be admitted to the official list of the UK Listing Authority and available to trade on the London Stock Exchange's regulated market. The offering is expected to close on February the 28th, subject to various customary closing conditions. In the meantime, the World Bank has approved a $486 million credit facility to Nigeria for electricity grid improvement. The World Bank says the investment under the Nigeria Electricity Transmission Project will increase the power transfer capacity of the transmission network and enable distribution companies to supply consumers with additional power. Nigeria's dilapidated power sector is often criticized by economists for holding back the country's economic growth. Business and households are subject to frequent blackouts, and many depend on their own generators that are expensive to run. We'll take a quick break, and when we return, from child refugee to fashion royalty, Sierra Leonean entrepreneur spotlights ethical design in London. Details in a moment. Just stay with us.